Traders, how you doing? I'm back. Had a nice vacation with family and friends. Back here and ready to get at it. Now you'll notice that things look a little bit different here. I've got a different scanning page up that I'm going to use. I find this to be a little bit more useful, and hopefully you will adjust to this because what it shows at one time, it's a bigger area. It's showing the same issue, the QQQ in this particular case, on the 15 minute, the 60 minute, 15 here, 60 here, daily up here, and weekly over here. Okay, so with these four charts, now when I'm scanning and looking for ideas to swing trade, um, or longer term trade, or day trade, these are the four time frames that I consult to look for. So I'm going to use this so you can see all four at the same time instead of that tab view, and we can refer to each one. Now, general as a market update, it's been sloppy. You can see here the daily chart, the QQQ, the bars are all over the place. It's really slop. Okay, up and down, up and down. But you'll notice on the weekly it smooths it out in a little bit. There's a lot of heat, right? A lot of retracements back against itself. Bottoms with candles don't mean squat. Pivot areas are getting violated left and right. It's really sloppy, but you'll notice it is basically generally flagging up here, or consolidating, or wedging, whatever your terminology is, in lower volume. Okay. Now, of course, you know that everyone knows that this rally has been long in the tooth. Okay, but right now it's looking like we could set up for a possible break higher, especially with all the general bearish sentiment, it seems. But at the same time, we got to be prepared for going both ways. If things break out, or if they start to break down really hard, especially with what's been going on in China, down over 7% yesterday. You know, it's one of those things where you've got to be prepared to go either way, and you've got to take stops. So I'm going to have a couple of lessons here. Like I said, I've had a hiatus here for a couple weeks due to vacation, and I'll make this video a little longer and talk about some really critical concepts. And I've got a new service that'll come out next month. Stay tuned for. I'll announce it here, obviously, on my YouTube channel, but also my website, tomwillardtrading.com. All right, so let's get to the SPYs. Okay, you'll notice the Q's is slop, but you'll notice that the SPY is also quite sloppy, right? This is the ETF for the S&P 500. Really, really sloppy, sideways, up and down. Hard to trade this from a technical perspective. Okay. In fact, if you're holding longer term, you'll see that all you do is just get a lot of heat back and forth, and ultimately, if you bought it in this area here, you're basically 209. You're right where you started over the last 2 months. Okay. Now, granted, if you timed it right with the perfect week, you could be up about $9 if you bought it here in the 200 area. Okay. And if you bought it up here in the 210 area, you're down a little bit. Okay. Either way, it is falling asleep here. Near the highs in a sloppy fashion. And this is building up potential energy, especially with earnings season starting up here in July, which is my favorite time to trade during the year, is during the earnings seasons. And typically March, June, September, December, I take it easy. I don't trade a whole lot, day trading wise anyway. If there's specific news, I watch the market. Everybody get up with the market. I take a look typically, unless I'm on vacation. And look for ideas, but if I don't see any ideas, then I just don't trade. I do overnight holds and swings primarily at that time, and then during the earnings seasons, I do both. So really sloppy here on the SPYs, but I think things may get a move here come July once earnings season starts to kick into gear. So be prepared, okay? And that's timed with my new service that's going to be coming up here soon. So in light of all that grinding and garbage type action, really it comes down to being able to pick certain sectors, flavors of the day that are moving. And you'll notice here that with the healthcare sector, it has been generally strong. You'll notice the strength here, and it had some really pretty big moves on a daily basis. This is the daily chart again in the white here to the left. These ones in the yellows, again, weekly. You can read daily, 60, and 15 down here in the lower right. Okay, so you'll notice that the healthcare sector is breaking out here after consolidating for the last several weeks, right? Since April. Came down, shook out, went sideways, held the area, and starting to break out. This looks like a decent long idea. Now the problem becomes stop, reward, risk, and I'll talk about that in the Disney example here shortly, and do a little lesson there so that you can start to think about these things if you haven't already. Okay, but this is looking like it wants to go higher, and with the possible consolidation of the businesses with the the Supreme Court ruling this week that Obamacare is here to stay for now. Anyway, these stocks have been catching a ride. Humana, let's take a look at that one. Also had the big rise. Okay, at the end of May, and has pulled back here some, but is strong. Cigna, another one here that's quite strong. You'll see on the daily chart due to acquisition. Okay, rumors and information. Okay, but notice the difference here. This is not something that you should be buying. Okay, at this point, on the breakout here on the daily chart 140. Okay, if you were watching this for a buy, absolutely. But at this point, it's gone too far. There's no pattern to enter. Going back to UNH, you notice it's starting to set up to break out. Okay, and there's no guarantee it's going to do anything like Cigna did. Okay, but is looking to break out and go higher. But the monthly chart's pretty extended. These things have had a pretty big run in general. So if anything, on these longs, on these things that have been running for a while, I would use smaller positions, half positions or whatever. Look to leg into your position instead of trying to buy it all in one fell swoop. Would be my suggestion. Okay, but that's a little bit more advanced and for another time. So now let's discuss Disney. Okay, Disney's been in the news. A lot of people love Disney, own Disney. The Star Wars movie's coming out. Everyone thinks Disney's one to be buying. And the bottom line is it's had a terrific run. The monthly chart, which is not pictured here, it ran from about $30 in July, August, September of 2012, okay, all the way to 114 here, 99 as of today. Okay, now people are wondering, they want to buy into this Disney, and should they be buying in, etc. My answer would be, of course, if you know me as a technical trader, no, absolutely not. And here's the reason. You'll see that there's no pattern on the daily chart here, which is your bread and butter with regards to buying stuff and holding it overnight. For me, okay, it's up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row here without a lower low. Maybe there's a slightly lower low here. But the bottom line is it's extended. To buy it now, okay, if you want to put in, if I were to say, if someone forced me to buy this now, the first question is where's my stop loss going to be? Where am I going to protect myself on the downside if this trade doesn't work out? And also, what is my target? Okay, so based on this and based on the weekly chart, okay, you've got a hard pivot here where it came down and shook out right here at 107.65 is the low. Okay, 107.65. So if you were to buy, say 107.5, if you bought it at 115, that's a $7.50 risk, okay, that you're putting out there. So say, to keep it simple, say you buy 100 shares, you're risking $750. Okay, if it comes all the way back down here and stops you out, you're going to lose $750 plus commissions. Okay, if it comes back $5, again, you're not out either way. Okay, because it hasn't your stop yet. All right, and then the next question to ask is, if that's my stop and my risk, what is my target? And my target needs to be typically at least 3 times the size of that risk. Okay, and so with $7.50 times 3, again, using simple math, is 22, say 22 and a half, let's just say $22, a $22 move from the 115 price. Okay, so 115 plus 22 is 125, 135, 137. It's got to get to 137 to give you that 3 to 1. Now, could it do it? Yeah, this could go to $1,000 a share for as far as I know. I have no idea. But then you've got to take a look at how far does it usually travel. Okay, you can see that for it to move another $22, okay, $22 plus the 7 from this pivot, that's 7 and 22, say $30 to round it off. Where does it move from another pivot, $30? Well, here at 90, okay, when it came down and hit 90, $30 would be 120. It still hasn't done it yet. Okay, and this was in February of this year. Okay, if we go back to this pivot here at 80, okay, 80 plus 30 will give you 110, 10, 20, 30. So that's more than that, and it took from October of 14, okay, to May of 15. So it took about 8 months, okay, to move that far from the absolute pivot to the point where it hit that $30 mark. So you're looking at probably having to hold this thing and also sit through some heat if it pulls back, okay, for many, many months. Okay, through the new year, through multiple earnings seasons, okay? If you want to get in, if you're going to get into this area and you're going to use a technical stop that's valid to me, which is this pivot low. If you say, well, I'm just going to put my stop 114, well, then you've got a lower percentage trade because there's a very high chance that it could come down and clip you there. And it may just clip you and then go higher. It may clip you and then go all the way down to 106, okay? So that is the risk of chasing these things. Is A, you don't have a pattern. B, they're extended, so you got to give so much room back on your stop loss for it to be a valid stop loss, technically, so that way you have to get so much more on the top side, and a lot of people can't stick it out. And so say this thing goes to 120, then they bail. Okay? Oh, I made my $5 a share. Good for you. Okay, but you were risking a lot more than that. You better have a very high win percentage. Okay, if you're going to be cutting your winners short like that. So the better approach with Disney, okay, is I like Disney, but I'm not buying it. What I'd like to see is it pull back and set up in the 112 area possibly. Okay, giving you much more reasonable stop with regards to the amount that it can move. Okay, or back into this base. But now what happens is when it starts to come back in there, people go, oh, see, this is a failure, and they don't want to buy it when it pulls back. They naturally think, well, it's pulling back here. It's going in the wrong direction. I don't want. Not everyone thinks this way. Okay, think I don't want to get it. I don't want to buy this thing down here. So what they'll do is they'll let it come back and then they won't take it. So if you've got a plan where you want to buy this minor support area about 112, that's where I'd be patient. Now this thing could keep running and it drives people crazy. If it does, that are wanting to get in long, but you need to act in a disciplined manner. You need to know what your plan is, okay? And I'll talk about that. Many of you have emailed me. Some of you, I don't know what you're doing. You get in trades and you're saying, well, where's my stop? I said, well, you shouldn't be buying a stock if you don't know what your stop is and your target is, okay? You have no business buying a stock if you don't know what your target, what your plan is. You don't have a plan with it. You just want to buy it, okay? So hopefully you found that lesson useful when I did it. I know it's a popular stock. People are buying it. I'm watching this. I would consider, okay, not necessarily buy it, but consider it if it got back down to 111, 112 area, and all other things are looking strong. The market looks healthy. And again, smaller half share sizes, I think, on the long side as things start to get a little dicier as we approach the next earnings season. I wouldn't be going all in on my share sizes, or at least that's not an approach I'm taking. Okay, I'm nibbling in, buying on dips, okay, looking and definitely not chasing. And if things keep going without me, then they keep going without me. There's so many stocks out there, I can find another ride to hitch on. I don't need to catch any particular one particular stock. Now, UNP here, I want to bring this up because I want to show that the importance of having stops. Okay, UNP today, I mentioned in Twitter as a possible long idea right in here. Okay, notice how it was strong. It came up. This is the 15-minute chart. Okay, notice how it was down 3 days, pretty big. Okay, notice how it was coming up and it has room to run if it can get above this area, which it never could. Okay, and it's set up here with a little minor pivot play. Okay, with the buy set up around 98.05 with a stop at 97.80. Okay, so what is that? 25 cent stop. Okay, so for example, if you did, it's 1,000 shares, you'd be risking $250 if it stopped you out. Okay, and this is the importance of taking stops, guys, because you look here. Okay, let's go back to the SPYs to compare. You'll notice the relative strength, right? The SPYs here were weaker than the UNP, and then they tried to pop up. So the UNP tried to pop up, and the UNP actually hit above that high. So if you took this trade, you would have gotten stopped out, most likely. And if you didn't take your stop, look at what happened at the end of the day. Okay, you've got to take your stops. You can't assume that, well, I'm not going to take my stop because I don't want to solidify the loss. I want to hold on and see if it can come back against me or come back for me. And in this particular case, it just kept going down, down, and down. This is why adding to a losing position is not wise, okay? Unless you have a distinct plan. When you add to it, you get out really quickly. You have a tighter stop. So in this particular case, you get in if you got in, and then you just get out. No questions asked. You're done with the trade. You move on to something else, okay? It's just one of a lifetime of trades that didn't work. And in my experience, more trades get stopped out than work, okay, if you're demanding higher returns like I do from my winners, okay? So that's an example of why you need to take stops if you're trading and not asking any questions, just getting out because the damage could be hard. And who knows what this is going to do tomorrow? It's down 3-4 days here, okay, or Monday, all right? This could go even lower. It's been in a downtrend here on the weekly. It's very weak. and it looks like it wants to go lower. However, I'd be, with 4 days down, you may get a little dead cat bounce on Monday, but we'll see. I'll keep my eye on this on Monday, okay? But as a day trade, you get a stop, you see it, you take it. Finally, an idea for next week and beyond as a trading idea. Apache. Okay, Apache, you'll notice here on the weekly chart, it's got crushed with the rest of the oil sector. It bottomed here at 55 on volume, bounced up, came up, made a higher low, higher high, about a higher low, then a higher high, and then it's come down now and swept out the low of both of these two pivots recently. Okay. Now, again, this is a more advanced pattern that I play, but this is something that now I'm watching because you got this major support here at 55. Okay. And it came down on volume here. You'll see the volume pick up, and then it popped up, pulled back, and then volume dropped off on this little pullback. And then today's trading day, volume picked up on a bottoming tail green candle. This looks like it's got some short-term upside capability. Okay, I'm watching this as a day trade and as a possible overnight trade Monday, Tuesday, Wednesday next week. We'll see what happens. Okay, so I would watch this. Bigger time frames again showing some support here at the 55 area. The daily chart showing a flush out here, inability to go lower, comes up, makes a higher low, and volume picks up on the reversal candle today. You got nice volume here toward the end of the day. You'll see the pops. So I like this as a long idea. Again, you have to have a plan. Don't just trade this. It's got to set up. Okay, but I'm watching this closely next week as a possible long candidate. Okay. All right, guys, it's good to be back. I hope you have a great weekend. We'll see you next week on Twitter. Follow me on Twitter. As we get into earnings season, I'm going to be trading a lot more and tweeting a lot more. Like I said, in June and even next week, I'm not going to be trading a ton, especially with the 4th of July weekend next weekend. But as we get into the middle of July, things are going to heat up. So follow me on Twitter. If you got any questions, email me, tom@tomwillardtrading.com. Have a good one.